And the same with CFR and CIF. These are our water rules. So again, these are when we must use a vessel. CFR says that the seller is responsible for delivering the goods to the destination and arranging for the transport to the destination. But when they turn the goods over to the carrier by placing them on board at the origin, the seller's risk transfer. So if something happens to that ship on the way to the destination, the seller arranged it, but it's the buyer's responsibility and the buyer's risk. And again, on here, on this depiction, you can see the very small part of this logistics chain that is covered by insurance. The seller must provide insurance between the red arrow and the blue and green arrow, so only while the goods are on board that vessel. And there are requirements for a lesser amount of coverage, what we call the FCPA, the Clause C, or the catastrophic coverage only. So it's very minimal coverage. So it's very important that as a seller and a buyer, you're understanding what you're agreeing to and what your risks are in these situations. You know, IncoTerms drafters will say it's really good for you to think about as a seller to sell with a C rule, because you get to control the freight. You get volume discounts perhaps. The more freight you book with carriers, the better rates you get. So you want to control the freight perhaps as a seller. So you want these volumes to add to your total so you can continue to get good rates. So you want to control the freight. You get those very important shipping documents that you can control. Remember, those are so important to be paid, to be able to collect the freight on the other side. Whoever controls those documents is in a pretty good position. And the best part about it, though, with the C rules, as a seller, you do not have the risk of that transport. So these are pretty slick. So IncoTerms drafters will say, consider selling C, selling the C rule.